Welcome to The Explainer. Today we're going to break down a really interesting real estate strategy, one that asks you to look way, way beyond your own backyard. We're talking about out-of-state investing, and we're going to dive into a specific model using Detroit as a case study. All right, let's just jump right in with a question. Does investing in real estate right where you live feel, well, kind of impossible? Or maybe the returns you're seeing are just, disappointing? Look, if you're nodding your head right now, you are definitely not alone.
So, if your local market is a no-go, what do? Well, the solution we're looking at today is actually pretty simple on the surface. Become an out-of-state investor. The whole idea is to find opportunity wherever it's hiding, not just in your own zip code.
But why go through the trouble of investing so far from home? I mean, it sounds complicated, right? Well, this strategy is built on 4 key advantages. First, you can find much more affordable properties, which means you need less cash to get in the game. That directly leads to a higher cash-on-cash return. Basically, you're making more money each year for every dollar you actually put in. And you get better risk management. Think about it. If the economy in one city takes a hit, it doesn't wipe out your whole portfolio. You're diversified.
Okay, to make this all a bit more real, the source material we're digging into today puts a spotlight on one specific market as a perfect example: Detroit, Michigan. So why Detroit? What's so special? According to the source, it's kind of like a perfect storm for investors. You've got this huge demand for single-family rentals, and on top of that, it's one of the fastest appreciating markets in the country right now. But honestly, the most interesting claim here, the one that really makes you go, is the comparison they draw to Los Angeles in the 1990s, right before its massive property boom. That's a bold statement.
But let's be real, investing from hundreds, maybe thousands of miles away, that sounds like a logistical nightmare. And that's exactly what brings us to the next piece of the puzzle, the operational model. This whole strategy hinges on a full-service company called the BNIC Network.
Okay, so what do? Their biggest advantage is what they call full-service management. And when they say full service, they mean it. The idea is they handle, well, everything. Finding the property, buying it, fixing it up, and even finding a good tenant to live there. It's totally hands-off for the investor.
Another big plus they point out is just how fast this all happens. They claim that the typical turnaround time from the day you close on the property to the day a tenant moves in and starts paying rent is just 3 to 6 months. That's pretty quick.
And third, let's talk about the money, because that's what it's all about, right? The structure is really interesting. There's a 2% fee, sure, but the key part is what's called a 10% preferred return. What does that mean? It means you, the investor, get paid first. You get the first 10% of the profits before the company itself takes a dime of its share. That's a big deal.
This all gets wrapped up neatly in a simple 4-step process. You've got identifying the property, rehabbing it, placing a tenant, and then the ongoing management and profit distribution. It's all laid out to be a totally hands-off journey for someone who wants to invest in real estate but doesn't exactly want the headache of being a full-time landlord.
All right, so we've covered the what, the where, and the how. Now it's time for the main event, the part everyone's been waiting for. Let's break down the returns. What's the potential payoff here?
The primary model that the source material details, the one they call the traditional investor path, kicks off with a $50,000 cash investment. And here it is, the big headline number. The source claims that this $50,000 investment can generate a typical return on investment of 30%. And get this, that's not an annual return. That's a 30% ROI in just 6 months. So let's do the math on that. If you get a 30% return in 6 months, well, that works out to a 60% annualized ROI. And what's really wild is that the source points out this is all done with cash. No loans, no leverage, just straight up cash investment. Okay, 60% ROI sounds amazing, but does it actually work in practice? In the real world? Well, to ground these numbers, the document gives us a case study of a real property on Mackay Street in Detroit. So here's the story. An investor, actually based all the way out in Los Angeles, put in just under $53,000 for this property. That was back in March of 2023. So what were the results? Well, after that initial 6-month phase of fixing it up, the property transitioned into a regular long-term rental. And for the full year of 2024, after all the expenses were paid, it delivered a cash-on-cash return of 13.85%. Now, it's important to understand, this is the ongoing year-after-year rental income return. It's totally separate from that initial pop in value they aim for during the renovation.
This case study leads us perfectly into our final section. Because let's be honest, not everyone has a spare 50 grand sitting around. The source gets that, so it actually lays out 3 different ways to get involved for 3 different kinds of investors.
So check this out. The table breaks it down nicely. On the left, you've got that traditional model we've been talking about, with a $50K investment. In the middle is a retail option, where you're basically buying a finished, rent-ready property. The returns there are measured by something called a cap rate, which is just a fancy way of saying its yearly income divided by its price. And then, all the way on the right, there's even a partial ownership option, where you can get in for as little as $500 by investing in an LLC that owns the property.
And for anyone out there whose interest is piqued by all this, the source lays out a super simple 3-step path to get the ball rolling. And it all starts with a consultation.
Finally, for those of you who want to dig deeper into this specific model, the source gives the direct contact info for the company, the BNIC Network.
So, we'll just leave you with this one final question to chew on. Is this the future of real estate investing for the individual? As more and more local markets feel completely out of reach, do these kinds of full-service, out-of-state models represent a real fundamental shift in how everyday people can build wealth through property? It's a fascinating thought. Thanks for joining us.